All right, welcome to today's YouTube Live, Steady Trader YouTube Live. As you guys know, one of my main things for our clients and students and the broader public is to make sure that I help you gain context when it comes to investing and trading in the stock market. And one of the main things that right now I see just about no one talk about is sort of the structural risks in the stock market as it relates to people's experience or lack thereof in bear markets. Right now, if you look at the average age on Wall Street, and this is by my estimate, this is not an official statistic, the average age of execution desks and sort of your typical broker type of environment, and even a lot of hedge funds, is probably closer to the high 20s. If you subtract high 20s minus 9 years, which is about what the current U.S. stock market bull run is old, you get to something like the early 20s, which means that a lot of these guys that are on Wall Street right now, not everyone, but a good amount of people, have never seen a bear market. Give me a thumbs up if you like that, or if that makes sense to you, or leave a comment down below if you have any questions. That is a really big, important structural point. We also see this from the amount of questions that we get from clients that basically have never experienced a bear market, or it's such a distant memory that they can't remember it. What that basically means, the way I see it, is that any sort of pullbacks right now that are 5% or 10% or 15% deep in the broader indices, they're going to feel a lot worse. They're going to feel a lot worse, A, because people simply haven't prepared for them. In other words, they're overextended in the sectors and stocks that are just run way too much. But also they're going to feel a lot worse because, again, they don't even know what a typical drawdown looks like. All right. So that's a really, really important structural thing to think about. We've talked about this on coaching calls this morning with our premium clients. And it's something I wanted to just quickly, at least on the surface, discuss here on YouTube Live to give you a little bit of perspective on all that. So to just quickly show you a chart on this, let me quickly turn this thing around. And this is not really particularly a chart on anything specific other than the NASDAQ 100. But to give you just a basic idea, this right here, from down here, this, again, very simple. This represents the bull market, or the market in stocks and U.S. stocks since the end of basically the financial crisis. So you can see there's been no bear market. It's been choppiness here, 2015, 2016, but that's kind of it. All right. So there's really no bear market that most of these people that are experienced have never experienced anything like this, and certainly not anything like this. So that's why I think the next turnaround, or not turnaround, but the next sort of volatility spike in stocks is going to feel a lot worse, and it could actually build on itself. So what could be a 5% pullback in normal conditions could quickly turn into a 10 or 15% pullback. Again, not because the market necessarily needs that, but because people don't know what to do from a risk management. A lot of people have forgotten how to manage risk because we've had such a long and really rampant bull market. So anyway, I hope this helps for some perspective. Give us a thumbs up or leave comments down below if you have any questions, and I'll see you in the next YouTube Live.